Welcome back to today's video, guys. And in today's video, what I'm going to go over is continuation trades. Continuation trades are something that that I didn't learn for quite some time, and I was struggling how to get into continuations. So I'm going to go over in today's video how you can get into continuation trades, especially if you missed that first initial trade. Let's say if your price mitigates a 15-minute supply zone, then it leaves without giving you your entry model. How can you then get involved in that price action and then follow it down to maybe a week 15-minute low, and get involved in order to take advantage of that move, instead of having to wait until the next opportunity comes along, which is absolutely fine. But if you know how to get into continuations, there is plenty of opportunity to get involved on the way down. So first of all, what we can see is when we are in a bearish market, for example, what you'll see is price come down, and then you'll see price retrace up, and hopefully up until the premium. Then you'll get a tap in, and then price doesn't actually move down in a straight line like this. What you'll see is a lot of the time you'll see bearish order flow. So what will happen is you'll obviously get your entry model. You'll come up, they'll tap into your entry model, and then you'll get price like this. So obviously what it will do is it will target like this low here. So as you can see, if this is the 15-minute time frame, what's happened and what we have done is we've tapped into the supply zone right here. So we've tapped into this supply, we've come down, we've had a corrective move back, which is always nice to see if you are getting in a short. So what we've done is we've come down, come back corrective, then we've got our entry model. So in this case, what it would be is it would be a change of character or a break of structure, whatever you know it as. So a chalk up, chalk down, it comes back to this supply zone right here, and then price starts moving away. So a lot of the time what you might get is you might get price just come up. So just forget this little section here. What you might get is you might get price come up like this, for example, and then you might just get price come down and then start mitigating and giving you bearish order flow to the downside without actually giving you your entry model. So what we are looking at is how can we get involved in these areas here on the way down. So essentially what we are looking at is this low right here is considered a weak low. And why is this a weak low, you ask? This is a weak low because this low has failed to put in a new high. As you can see, this high hasn't broke structure to the upside, and obviously the job of a low or a high is to put in new lows or new highs. And as you can see, obviously this hasn't done it in this case here. So what would we expect to see? Obviously knowing that this low here is weak, we would expect obviously for this low to be taken, as this low is now targeted, this high is protected, and we are looking for price action to come down and take out this low right here. So I'm just going to go on the charts now and give you a couple of examples. And yesterday's price action on Euro USD was ideal to show you what I'm talking about here. So what we can see if we come down on my chart here is this is the 15-minute chart, and what I'm going to do actually is I'm going to go up to the daily and just show you what I was seeing yesterday on Euro USD. So if we come up to the daily, as you can see, according to my rules, the daily is actually bullish at this point because it's broke structure to the upside. But as you can see, we've had a change of character. So we've had a change of character, so we're taking the high, taking the low, and then as you can see, it's respected that and started coming down pretty bearishly. The momentum overall in this leg is to the downside. And then onto the 4 hour. Onto the 4 hour, we've actually had a break of structure to the downside. So the 4 hour for me is obviously bearish. If I just bring it over a little bit, as you can see, we've had a little bit of a range here on the 4 hour, and then we've broke to the downside, and as you can see again, the overall momentum on this leg here is to the downside. And as you can see, all the markups that I've got are right here. So this is where we're going to be getting involved, and this is what I'm going to show you on the 1 minute time frame, which is my entry time frame. So on the 15-minute, if I just bring it across, as you can see, what we are getting is we are getting bearish order flow. And one thing to keep in mind is the premium and discount tool, which comes in handy. I've obviously got a video on the channel about that. If you don't know what it is, watch that and you can find out how to use it and things like that. But essentially what you are looking at is we have had a break to the downside right here, and then as you can see, we've come here and then we've come down, come back to the premium, mitigated the premium, and then we've broke to the downside again. So we've come to the downside, mitigated the premium again. The next leg right here, come to the downside. What have we done? We've come down, come up, mitigated the premium, and then we've continued. and then at the moment this would be our 15-minute leg to the downside, and at the moment we haven't seen a retrace up into the premium yet, but that's what we can expect to see. So dropping down onto the 1 minute, what I'm going to show you is a missed opportunity, and then how I got involved after missing that opportunity. So as you can see, we have got 1 minute price action right here. What I was thinking is, obviously we've had a break of structure to the downside, we have come back up, we've had a higher time frame mitigation, and this is when I was looking to get involved on the 1 minute. And for me, this candle right here at the top, you know, we could argue that we could enter on this, but you know, for me it was a little bit small, so what I did is I marked out this candle here, and then I entered on the 50% of the fib, and then as you can see, price come down. So price come down right here, price come down right here, and it actually didn't return to, you know, this overall candle right here. So that opportunity there was a missed opportunity. And then at this point, what I was thinking, you know, how can I get involved in the market now I've missed my initial opportunity? So what I would recommend doing is I would recommend going onto the charts and creating a trade plan for continuation specifically, because you don't want to be going ahead and just taking trades blindly. So for me, I've got certain criteria that I look for when I'm looking to get into continuations. So what can we see on the 1 minute for a confluence in order to get involved? So as you can see, we are relative equalized right here, just marked up. What happens then is we come up, we sweep, we come down, and we get a break of structure. On the 1 minute, I'm happy to see now a wick break when I'm looking to get involved in continuations. What we do then is we get a nice candle here for a point of interest, and obviously we have an expansive move to the downside, leaving imbalance that, you know, could be filled at a later stage. So what I did is I took this candle here, set my order, and then I wanted a 2 pip stop. So what I did is I just entered and obviously made it so the stop loss was above this high right here. And then as you can see, price returned. So price returned, tapped into our POI, and for this trade I actually took profit at 1 to 5, which was it pretty quickly. But as you can see, as I just explained, you know, on the little diagram, this low right here is my 15-minute low, and as you can see, it failed to put in a new high. So what does that mean? This low right here becomes weak and targeted, and then what do we expect? We expect price to come down and take out this low. And as you can see, what happened? The low got taken eventually. You know, it took quite a while, but eventually it did get taken, and that's what I mean by just following order flow. And then as you can see, we've got a nice 10-minute candle right here. And then what happened is we come back up, we mitigated it, so we tapped into this 10-minute POI, we came down, we came up, we had an expansive move to the downside, which did lead to this break of structure right here. We've got a little bit of imbalance, and then I look to get involved again, so a 2 pip stop, making sure we cover this order block right here. What did price do? Price returned, tapped in, and then it come and took this out right here. So as you can see, we are obviously, you know, quite low in this leg, but for me, the overall narrative was for us to come down and take out these 15-minute lows. So for me, I was still happy to get involved right here and, you know, get involved in order to, you know, take out these 15-minute lows. What we did then is we come down, we broke structure on the 15-minute, and then as you can see, we come back again to mitigate further into this 10-minute zone. So for me personally, I don't consider a zone fully mitigated unless we hit the 50%. So if we just get the gam box right here and just measure it out, as you can see, we came back up and we mitigated the 50%. So for me, this overall 10-minute POI, I did then consider fully mitigated. As you can see, we got a little tap in right there. But for me, until we hit the 50% of a point of interest, I don't consider it fully mitigated, and we can obviously return to this at a later stage. We come down, we get our entry, and for me to get a 2 pip stop loss on here, if I just show you, you know, I would have to have my entry, you know, up into the 25% level, and for me that's not ideal. So I entered at the 50% and just put my stop loss above. 3.5 pip stop, pretty nice to be fair. You know, you don't always have to get a 2 pip stop loss, it's not absolutely necessary, but if I can get a 2 pip stop, then, you know, that's what I will do. So as you can see, we've got pretty much the same confluences as the previous set of trades right here. So what we've got a little bit of trendline liquidity down here that we can target, As we can see, again, this 15-minute low failed to put in a new high and failed to do its job. So what does that mean? Obviously, this low then becomes targeted, and then eventually what we do is come down, take out this 15-minute low in line with expectational order flow. As you can see, we got involved up here, and then what we did is we got a little continuation trade. And you might be asking, why didn't I get involved in a trade, right here? So I'll just go ahead and I'll explain that. So what we see now is we've come up, we swept these highs right here with this little bit of price action, and then again you might be asking, why haven't we got involved at the extreme up here? So for me, what I like to see is I like to see some sort of imbalance, which is this sort of price action right here. And as you can see on this little bit of price action, there's no inefficiency, no imbalance, no void in this section of price action. So this is the reason why I chose this point of interest right here. Again, we come up, we've got a 3 pip stop, and that's absolutely ideal. You don't always have to get a 2 pip stop, like I say. And as you can see, the overall narrative was for us to come down and take out this 15-minute low. So for me, that was a nice trade to get involved in. And like I say, it's pretty much just mitigation to mitigation. You will see this a lot when you are on the lower time frame. So I don't just sit on the 1 minute time frame and look for this type of price action. What I want to see first is, obviously an higher time frame mitigation. So for example, if I got involved in this trade here, what I would be looking for is I would be looking to get involved in continuations only after my risk is off on the first trade. So once I go break even, I can then start looking for continuations. But like I said before, you want to get a plan and you want to have some sort of rule set or some sort of checklist when it comes to, getting into continuation trades. Like I said before, you don't really want to be, getting into trades on every single order block. You want to have a certain rule set in order to get involved. And that just keeps you out of a lot of crappy trades. But yeah, just a really interesting video for you today, guys. Something for you to think about if you are, missing a lot of your first entries or you're wanting to, learn how to get into continuations. I hope this video helps you out and shows you a little bit, how I see the market and how you can also get into continuations. But yeah, without further ado, guys, if this video did help you out, I appreciate you watching. Leave a comment down below and I will see you in the next one.